In this video, we are going to talk about 8 top defensive stocks to invest in for 2022. So before starting this video, please like this video and subscribe to this channel for our future updates. The recent volatility has caused many investors to feel apprehensive about the shape their investments are currently in. As interest rates begin to climb, investors are beginning to shift their focus toward companies that are considered more conservative. The term defensive stocks refers to stocks that are seen as being safer. It's possible that they don't have the same chance for enormous returns as more risky equities do, but they come from industries like healthcare and consumer staples, which are projected to do well regardless of how the economy is doing. Why would anyone want to hold a stock when circumstances are tough or when things are getting more precarious? Why not just choose the security that comes with a treasury bill, which offers a rate of return that is essentially risk-free? The solution is as straightforward as the fact that greed and fear can frequently be shown to be driving market activity. In order to appease greed, defensive companies typically provide investors with a bigger dividend yield than what is possible in markets with low interest rates. They ease fear as well due to the fact that they are not as hazardous as conventional equities and that it typically takes a huge catastrophe to derail the business model that they use. Investors should also be aware that the majority of investment managers do not have a choice but to own shares in the companies they manage. Investors will move their money into defensive companies if they believe that conditions are going to be more difficult than usual. Defensive stocks outperform the market during economic downturns. During expansion, they generally underperform the market. Low beta measures market risk. Defensive stocks have betas below 1. Consider a 0.5 beta stock to better grasp beta. The market may decline 2% in a week, but we expect the stock to fall 1%. A 2% market price gain over 1 week predicts a 1% defensive stock price increase. These stocks are some of the greatest defensive stocks available on the market now for investors who are wanting to protect their portfolios from any potential future volatility. All of these possibilities offer a strong basis for long-term worthwhile, also demonstrating the ability to develop and create something for the foreseeable future. Number 8. Lockheed Martin. Having signed contracts with the United States government and other governments across the world in the fields of space, aeronautics, rotary and mission systems, and missiles and fire control, Lockheed Martin is a stock that can be considered a literal defense stock. Lockheed Martin is in a class of its own when it comes to dependability in the national defense industry, which is not forecast to see any problems in the near future. Investors have little cause to doubt this or other defense equities given that the United States is currently pursuing an increase in the budget allocated to the military. Number 7. Costco. Everyone who shops for their groceries in large quantities adores the giant retail chain Costco. Due to the fact that it sells everything from groceries to vacation packages, it is probable that customers will continue to purchase there regardless of how the market shifts. Costco discloses its sales figures on a monthly basis, and the most current numbers, which cover the month of April, indicate a significant rise in comparison to the previous year. The month of April 2021 had a 13.9% growth in net sales, bringing the total to $17.33 billion. This rise is another excellent sign for a stock that has already proven to be a reliable defensive investment. Number 6. Walmart. Large retail chains are often ideal choices for defensive stock picking, with Walmart serving as a perfect illustration of this investment strategy. According to Fortune, this corporation has more than 2.3 million employees, making it the largest private employer in the entire globe. It is a genuinely gigantic organization. People in the United States and in every other country in the globe rely on Walmart on a daily basis to provide them with groceries and virtually anything else they might require. Walmart remains an excellent pick for an established and dependable defensive stock, despite the fact that it faces severe competition from online shops. Number 5. FedEx. In the United States, FedEx is practically synonymous with delivery, despite the fact that the company also provides a vast array of commercial and online shopping-related services. It keeps up a broad supply chain, which places the company in a position to be successful regardless of the type of economic environment. The recent announcement of a large contract between FedEx and Microsoft is one incentive to consider investing in FedEx at this time. The continuation of the partnership between the two businesses will entail the development of a wide range of creative new applications, including network intelligence and logistics as a service. FedEx is an excellent choice because it is a corporation that has a strong foundation and is consistently at the forefront of innovation. Number 4. Mckesson. No matter what the state of the stock market is at any given time, individuals will always require medical care. Because of this, the sector has become an essential component of conservative stock portfolios, and Mckesson is an excellent illustration of this. The company offers a variety of services, including administration of healthcare supply chains, specialty care, retail pharmacy operations, and more. Mckesson is currently performing better than the majority of the other defensive stocks on our list, since its current price is quite close to the highest point of the 52-week price range. Number 3. Proctor Gamble. The corporation Procter & Gamble sells a vast variety of goods under many different brand names, such as Gillette, Olay, Oral-B, Tide, Dawn, Bounty, Febreze, Pampers, and Pantene, to name just a few of the more well-known names in the company's portfolio. As a result of the fact that these are all consumer staples that are resistant to changes in the economy, Procter & Gamble is an excellent choice for a defensive investment. The most recent report from the corporation demonstrates remarkable growth that is well above what was anticipated. According to a press statement, the company's forecast for all-in sales growth for the fiscal year 2022 has increased to between 4% and 5% from its previous projection of between 3% and 4% growth. Net sales for the fiscal third quarter of 2022 were $19.4 billion. It is well worth one's time to investigate Procter & Gamble given the company's strong base of operations and consistent growth. Number 2. CVS Health. CVS is a well-known pharmacy chain that operates over 9,900 facilities across the United States, including all 50 states, the District of Columbia, and Puerto Rico. CVS has continued to expand and thrive despite competition from pharmacies located in larger retail chains like Walmart. As a result of the company's resiliency, CVS is a wonderful defensive investment to have in your portfolio. In 2018, CVS was able to successfully complete its ambitious acquisition of Aetna, which is a health insurance firm based in the United States, along with its tremendously stable base as a drugstore and retail shop. According to a press statement from CVS on its first quarter results, quarterly profits have climbed to $2.3 billion. The synergy between CVS and Aetna has played a significant role in contributing to this growth in quarterly profits. Number 1. General Motors. GM's reputation took a devastating knock in 2008 when the U.S. government stepped in to save the failing car industry, but the corporation has made tremendous strides forward since then and is now very successful. Today, investors view the company as a very safe bet with a bright prospect for the future in the field of electric car development. Chevrolet, GMC, Buick, and Cadillac are just a few of the brands that are under the GM umbrella. This goal will be accomplished by the corporation by 2025, and it will involve the creation of 30 new electric vehicles. In spite of the difficulties it has faced in the past, General Motors possesses a strong foundation now and has demonstrated that it is also considering the future. This is an excellent mix for any defensive stock. These 8 defensive stock picks each have something distinctive to offer, which makes them potentially suitable candidates for inclusion in a portfolio with a more moderate risk profile. Investors are becoming more cautious as a result of interest rates and other issues. These stocks demonstrate the potential for additional growth despite the challenging market conditions. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.